We've all been trying to make sense this morning, as we do every morning, of where we are in this economy and where we are in the markets. And I haven't had an opportunity to hear from you and ask you where you think things stand right about now. I know you always think about things sort of in the machine, the economic machine. So help us understand what's going on inside Ray Dalio's mind right now.
Well, I think it depends on the time frame, and I think the relevant time frame is the next few years. And I think you have to put things in the context. So there are three big forces that have been at work, and I think you have to understand those. First is the debt money thing. How much debt and money, and what are the repercussions? How does that pass through the economy? What does that mean for markets, inflation, and so on? We're in a different era now. Zero interest rates, produce a lot of debt, and monetize it. Second influence, the conflict, internal conflict over wealth, left-right conflict, that conflict. And then the third is the rising of a great power in the form of China, challenging an existing great power and challenging the existing world order. Those three things are coming together at the same time as then we have a pandemic. So I think each one of those is a cycle. What's happening now has not happened before in our lifetimes, but has happened in the 1930 to 45 period. I went back and studied it over 500 years, and so it's that context. So I think if we're talking about anything, we should look at that within that context.
Okay, let's break it down then, and let's start with the debt situation that we have in this country, and the zero interest rates. Given you're a student of history, what happens next?
There's not enough money to go around, right? We're spending a lot more than we're earning, and we have to do that partially because of this social redistribution, that necessity, and they can't take it all from taxes. And what that means is the printing of money. So it's the mechanics of that. So what you do is you get more money, and so that devalues the value of money. In other words, cash is trash.
You came on our air, I think, in Davos and said cash is trash. You still believe it?
Of course you don't. Look, this is guaranteed. You are not going to have an interest rate that's going to compensate you anywhere for inflation. So you have to look at the cost of the money, right? And so that interest rate, whether it's the bond rate or whether it's the cash rate, certainly, you're not going to get that. And so we have this wonderful sugar high, which is to distribute the checks and so on. But that means everything else goes up in relationship to cash because it's better to borrow cash. That's just mechanics. So we have that dynamic underway. So we produce inflation. But what you do know is that interest rates must be below inflation rates and must be below the nominal growth rate in order to deal with all of that debt in order to finance it. And that depreciates the value of cash and money. So you have to invest it elsewhere. That's the dynamic, right?